Okay, this is five financial statement horror stories. And 3, 2, 1. Hello, and welcome to 5 financial statement horror stories. By talking to you about these horror stories, it'll give you the tools that you need so that you don't make these mistakes. So let me share my screen and we'll get started. My name is Ruth King, and I am profit and wealth guru and founder of Financially Fit Business. And these horror stories are things that we see all the time, and how some of them can be made aware of, but also be prevented by doing specific things and implementing strategies so that these issues don't become major crises. So we're going to go through those today. But first, thank you for joining me. Appreciate your time. Look forward to helping you avoid some stress and sleepless nights when you don't make these horror story mistakes. First of all, most business owners think that understanding a profit and loss statement or a balance sheet is really, really hard. You look at it like this. This is the snake. I don't want to deal with you. I'm staying as far away from you as I possibly can. That is what we find with most business owners. You don't start your business to do the financial side. However, the financial side is what's going to keep you in business. And that's the really interesting part about it, is you have to learn it at some point if you want to survive and grow in your business. And, I disagree with most people because I think they're wrong. I think financial statements and you should be looking at them like this. Every single month you get your financial statements, go, yay. Some months it's better than others, obviously, but you should also know that this is your scorecard. This is how you keep track of what's going on in your business and how you grow productively and profitably. Once you get the hang of it, financial statements are really pretty simple and easy to understand. So for those of you who are in contracting, like HVAC or electrical, or anyone who's ever looked at this for the first time, this is a wiring diagram, all right? So these industries look at these and they go, I don't know what what it is in the beginning because they've never seen it before. And they look at, I don't know how to do it, but they look at it and they go, I guess I better learn this because I need it for my job. And that's right. They need to learn it so that they can do their jobs properly and they can get raises and they can take care of their customers, et cetera. So what in the beginning was really, really, really hard for them becomes really, really, really easy for them after a few months. And they go, why did I ever think this was hard? And it's the same thing with financial statements. Another example. If you're watching this, more than likely, you know how to drive. So think about the first time you got in a car, other than the fact that, yay, I'm going to have freedom, yay, and that type of thing. And it was hard. You had to pay attention to how fast you were going. You had to pay attention to the road. You had to pay attention to everything. You didn't want the radio on because you had to concentrate so hard. And then, the more you practiced, the more it became reflexive and everything else like that. And then what happens? You stop paying attention and you start texting when you're driving, and then you end up in a crash. So when you stop paying attention, once you get it, is when things go haywire. So not only do you have to learn to do it, once you learn it, it becomes reflexive and easy, but you still have to pay attention. So you need to be able to do those types of things. So today, what we're going to do is I'm going to give you the 5 financial horror stories, what you should monitor and how to fix them. And everybody asks me, well, why should you care? Why do I really care about the financial side of my business? Well, we talked about the financial side being a tool. Your business is a tool. It is something that you use to go where you want, when you want, without having to worry about money. And if you're sitting there listening to this and watching this with cash flow problems and going, there is no way that this is happening to me. Well, it absolutely can if you really start paying attention to the financial side of your company. And it actually does become fun to get your financial statements. I know for most of you, that seems like, oh my gosh, there's no way. But do a little practice. Pretend you're learning to drive. and you'll find they get easier and easier and easier. And then one day you wake up and go, why did I think these were hard? Okay. So, if you take care of your business and you watch your cash flow and you watch your profitability and you take care of your customers and you take care of your employees, you'll be able to live the life of your dreams, which is what you really and truly want. And your business should be the tool that allows you to do that. You should be going, yay. All right. All right. Remember a couple of things. Number one, you don't have to fix the mistakes personally. You don't have to do that. You can have hired bookkeepers or other people to do it. You have to recognize them and you have to take the action to get them corrected. You don't have to physically correct them yourselves, but you have to recognize them. You have to make sure somebody's working on them, so you're monitoring that they're getting fixed. All right. So just remember that. A little bit about me. My role in life is to have a profound positive impact on people's businesses and lives by giving them the tools and processes to get and stay profitable, build wealth, and significantly impact their lives and the lives of their employees. That's why I'm on Earth, and I love doing this. I've spoken to many, 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 many companies over the past 35 plus years that I've been doing this, and I've written 6 books. The bottom 3 are really the financial books, other than The Ugly Truth About Cash, which is on top. But Courage to be Profitable is what a P&L and a balance sheet is in English rather than in accounting babble. And they're all on Amazon. They're all story driven. They're quick, they're easy. And you'll remember the stories more so than you'll remember the actual formulas, especially in the beginning. So go to Amazon. They're on Kindle, they're Audible, whatever. If you prefer to listen than read, go for it. Okay. So let's get into the horror stories. Number 1, operating your business on a cash basis. So one of my former clients, her accountant told her to set up her books on a cash basis. And so she did. She didn't know any better. And so she started, her P&Ls and her balance sheets were always telling her that she was profitable, but she had this nagging feeling in the back of her head that we're really, really and truly not profitable. And so she and I had a conversation. I said, all right, switch your books to accrual. And she did. And she started looking at them. And I will not give you the expletives that she said, but it was blankety blank. We are not profitable. And what she ended up doing was totally fixing her business and turning it into a profitable business and successfully retired. So you have to operate your business on an accrual basis. Cash basis accounting gives you a really false sense of security because you almost always are profitable. You're not going to pay a bill if you don't have the money in the bank to pay the bill. And cash basis accounting says you have a revenue when you actually get the money for it, and you have an expense when you actually write the check for the bill, rather, not when you actually get the bill out to the customer and the invoice in from the suppliers that you have. So it's a very, very bad sense of security, false sense of security. So you have to operate your business on an accrual basis, which means you have receivables and payables. And if between you and your CPA, you can pay your taxes on a cash basis. There is a limitation that the IRS says when you have to switch to accrual accounting, but that's a conversation between you and your CPA. And operate your business on the accrual basis. And if your CPA gives you a hard time about it, it is really one little thing, like I'm going to show you right now, to switch it from cash to accrual basis accounting or back. So how do you know your financials are on a cash basis? There's the left-hand corner of a QuickBooks statement. And our software will warn you if you upload statements on a cash basis. The AI reads it and knows whether it's on a cash or an accrual basis. So if you look at, and this is just a balance sheet example, over on the left-hand side, you'll see it's accrual basis, and you can see that it says accrual basis. All your CPA has to do to file your taxes on a cash basis is make that one switch and put that back to cash. You can see that there are accounts receivable, and you can see that there are accounts payable. So you know that your accounting is on an accrual basis. All right, so one button in QuickBooks to fix it. Other software, it's usually in setup. You set up your books on an accrual basis or cash basis. It will give you that option when you are setting up your business. All right, horror story number 2. So every month and every week, we do with some of my clients a weekly cash flow report, and we do budget versus actual in terms of where you are with respect to what the budgeted revenues and expenses are. And I was warning the owner of this one company, and his bookkeeper was warning the owner of the company. He was not paying attention to either of us. We were telling him he was running out of cash, and he was not paying attention to it. And then one day he ran out of cash. So what happened there? He had to get hit between the eyes with a 2x4, even though the financials were telling him this, I was telling him this, his bookkeeper was telling him. He had to have something horrendous happen so that he was in a situation that he finally paid attention. All right, so let's take a look at this. So how do you know you're running out of cash before your checkbook says that you're running out of cash? It's decreasing profitability and decreasing current ratio. So what do those two things mean? Let's take decreasing profitability first. And all of this data gets provided by Financially Fit Business. So you don't have to do this. You don't have to do the graphs. You just upload your financial statements, click a button, and the graphs get produced for you. So if you look at where inside the circle, the purple line on the bottom is your net operating profit, and you can see it's going down. You can see that your overhead is increasing, and it's about touching your gross profit line. So it's really getting into a dangerous area. Don't let it go for 6 months like this. Turn it around. I mean, a lot of times it's pricing. A lot of times the guys or everybody producing the work is not as productive as they were. Why is overhead rising? I mean, take care of it, when it was like, a year ago, rather than let yourself run out of cash. Not a good idea. All right, the current ratio, decreasing current ratio. First of all, current ratio is current assets to current liabilities. Current assets are things that are cash or turned into cash within a year. Current liabilities are things that you have to pay within a year. And it has to be greater than 1, or you are in a cash flow crunch, which means you have more things that you got to pay on a current basis than you have money coming in the door to take care of those payments. Not a good idea. And then if the ratio is decreasing, there's where you're telling that you're going to be running out of cash. Why is your business being less profitable? And you have to find the answer out to this question. And this is what Financially Fit Business does, and it shows you the graphs. You can see that the current ratio, which is the blue line on top, and the red acid test line are going down. Do something about it. Don't have to be hit like my client was between the eyes with the 2x4s before you recognize that you're getting out of cash. Now, this graph basically went to 1. Not a good idea. Definitely not. Watch the warning signs, take care of them. All right, horror story number 3. Again, there's a company that's growing really, really, really fast. They are really busy. They can do everything they can to bill, and they're not worried about collecting their receivables. And so I'm watching the receivable days go up and up and up and up. And I'm saying, somebody's got to start collecting. We're too busy. We're just going to bill. That was the answer that I got for months. And their trailing graphs, i.e. their graphs, looked like this. I mean, you could tell that they were going to run into a cash flow problem. So one day they had over $1 million of receivables and no money in the bank to pay for the gas bill so that the guys could get gas in their trucks to go do their jobs. Again, you had to be hit by a 2x4. Duh. Watch your receivable days. You don't have to do the collecting. Remember that. You just need to monitor it and make sure that somebody is doing the collecting. Those receivable days should not be going up dangerously. That is an incredibly big warning sign that you have a collection issue. All right, horror story number 4. A theft you didn't catch because your financial statements are 90 days late. So company owner has an accounts receivable clerk doing the billing and the receiving of payments and all that sort of fun stuff. And he is, monitoring the fact, what bills are out, what did we get in the bank, where is our cash flow specifically. every single week. So he thinks he's doing a really good job, but he's not looking at financial statements. January statements, you'd get them in April. You don't remember what January looked like when you're already in April. All right. By February 15th is when you should get January's financial statements. So what was actually going on, and this is something that Financially Fit Business can't help you with because the statements are 3 months late. She would collect it, and then she would take the cash and make everything balance with journal entries. So what was going on is he'd get the financial statements showing less cash than he should have. He never understood why, but never bothered to check the journal entries to see whether somebody was actually taking cash out through journal entries. And that's how that, about $100,000 before they caught it. It's a lot of money. So look at your bank statements online every day. That is number one. And you should do this even if you don't subscribe to Financially Fit Business. Looking at your bank statements online is your first line of defense. He would have seen that she was taking money out in areas that didn't make sense. All right. Look at them. If something doesn't make sense, find out what it is, follow up. Look at the journal entries when you get your financial statements to make sure that there's nothing really crazy about it. Oh, go back to number one for a second. If he had been looking at the bank statements every day, he would have watched her taking the cash and he would have caught it, before $100,000. He would have seen it. She would have been, in jail in an orange jumpsuit. And then make sure you get all the reconciliation reports of your bank statements, your credit cards, and your vendors, and make sure that you get the reports, not just looking at what is, the final thing. You want to see all the transactions and just quickly look through them to make sure that what's on the reconciliation report is actually correct. So, last horror story. And this has happened a lot since COVID. You're afraid to raise your prices when your costs increase. You got to do it. And we don't have to raise our prices. We don't have to raise our prices. Yes, you do. You're less and less and less profitable. So this is a conversation that I had with a lot of my clients until one day they realized that their numbers looked like this. Okay. So look what's going on the top side. Their revenues are going up, but their gross profit, which is the orange line, is going down because they haven't raised their prices. They've had to give raises to their employees so that the overhead line is also going up. And then if we look at the net profit line, you're almost a non-profitable company again. Not a good idea. Take a deep breath, raise your prices, and make sure that, if your customers ask questions, say, look, our suppliers have increased their cost, their prices to us by 20 or 30%. I had to give everybody raises. So in order for us to stay in business, and you'd like us to stay in business, wouldn't you? Well, yeah. We've had to raise our prices so that we can remain profitable. And people get it. Everything's gone up. I mean, look at the price of eggs these days versus what it was, pre-COVID. Craziness. Absolutely craziness. So those are the 5 horror stories that you now are aware of, so I know you won't make them. So where Financially Fit Business helps you is by uploading your financial statements, clicking the Analyze button, doing it on time, and taking action when you see the trends of the graphs growing the right way. You'll avoid these horror stories. And it's just click on the button below to subscribe and get started. Thanks for investing your valuable time with me. Implement what you learned.